Hi guys, welcome back to the channel. I had to make this video right now because this is pertinent news that literally just dropped 19 minutes ago, and this affects the real estate market. If you have been watching my videos this week, we have touched on a number of things, right? I'm telling you guys, get prepared, how to protect your family. Start aiming to pay down your mortgage so you can truly live an economic free life. You can have financial freedom. You could be financially empowered. Y'all, I was just creating these videos because I've been a realtor since 2004 in DC, Maryland, and Virginia. I have a lot of knowledge watching the data and seeing everything that's happening. I know that we are in for some grim economic challenges coming down the line. I never said it like that in any of the videos that I uploaded this week, but after what I just saw, and for the sake of the YouTube algorithm, I'm not gonna play the clip, but I went and I watched this video. It literally dropped 19 minutes ago, but the last reporting was from 4 days ago, okay? Jerome Powell, Fed chair, says that mortgages may not be available for long in some parts of the country. Y'all already know that when the year started, 2025, the Palisades in LA was on fire, right? A lot of those people experiencing that natural disaster found out that their homeowners insurance had been canceled. State Farm canceled thousands of homeowners insurance without the homeowners knowing, okay? Remember that part, guys. The fact that these high income areas have been experiencing all of these natural disasters, it's basically bankrupting homeowners insurance. Homeowners insurance has been leaving California, has been leaving Florida, okay? Right now, topic of discussion is California. And in the clip that I saw, right, the Federal Reserve Chairman Jerome Powell recently highlighted concerns that over the next 10 to 15 years, certain regions, so follow me, guys. I'm going to dive deep after I read everything to you guys. Certain regions in the United States might face difficulties securing mortgages. This potential issue arises from banks and insurance companies withdrawing from areas they consider high risk due to climate-related natural disasters such as wildfires and flooding. Wildfires, California; flooding, Florida; maybe even North Carolina and Georgia. Pay attention, guys. Without adequate insurance coverage Without adequate insurance coverage, obtaining a mortgage becomes challenging, as lenders typically require homeowners insurance as a loan condition. In California, for instance, insurers have been canceling policies in regions prone to wildfires. I already told y'all about State Farm, okay? While this situation doesn't mean an immediate cease on home loans across California, it does suggest that specific high-risk areas may face increased challenges in securing mortgages in the foreseeable future. Guys, Jerome Powell said in the next 10 to 15 years. 10 years is going to get here very fast. We're going to look up and it's going to be 2035, okay? Why is this information so hot off the press? Because if you are making financial plans, if you are someone who's like, I want to buy a house, but you're dragging your feet, you think you have time, you're waiting for Trump and Elon, and you're waiting for the market crash, and you're waiting for home prices to come down. Oh, I'm going to refinance my house when interest rates get lower. Y'all, I'm not trying to press you out. Keep waiting. but you might mess around and find out that you won't even be able to qualify for a loan, because if this in fact happens, and the fact that Jerome Powell said it on video, like the video lives on YouTube, I don't want to play it because, as you guys know, I am on a journey on getting my channel monetized. And one thing that you cannot do on YouTube is play music that you don't own, and also play audio or videos that you don't own the rights to. So I don't want to mess nothing up on my channel. We're not going to play the video, but the name of the video is "Mortgages May Be Impossible to Get in Parts of the U.S. in the Coming Decade, According to Fed Chair." Okay? I'm going to have notes on this in the description, so you'll be able to look up the video and you can hear it out of the horse's mouth. Not only did he say banks and insurance companies were bailing from certain regions in California and Florida, he also said we're going to see a time where there won't be any banks in these states. There won't be any ATMs. Banks are not going to be giving out home loans, car loans, business loans, all of that. If you are not able to get homeowners insurance or any other type of insurance, that is a prerequisite for most home loans. We're going to talk about home loans because that's what we talk about on this channel. But this is going to affect the financial markets, guys. So remember the video where I said we're going to pay our 30-year loan, our 30-year mortgage off in 15 years? Pay attention to this, guys. Pay attention, because this is going to affect the housing market, okay? Decreased home values. If mortgages become harder to obtain in certain regions, demand for homes will drop, leading to decline in property values. So if you are someone that lives in a state or in a region that you already know is prone to big natural disasters, and it's hard for you to get homeowners insurance, maybe you don't pay off your mortgage, right? Because if property values go down, you may do all this work to pay your mortgage off sooner than the 30 years, but then your house isn't even worth it. Or maybe, yes, you get your home paid off so that when home values go down, God forbid, if anything happens, you can actually still make some type of profit when you go to sell your house because you own it outright. It's a live physical asset. You will not have to pay back a mortgage company if you pay your loan off before the term of your loan. You actually are going to save thousands of dollars. I already made a video about this week, guys. Pay attention, okay? Cash is king. Also, what do you think is going to happen? The people that have money, they're not going to stay in those areas of California. People are leaving Florida by the thousands right now as we speak, and they are going to more favorable areas. If you are in the DMV, guys, we have always been a highly favorable area for people from all around the world and all around the country, because there's always jobs in our area. We have a steady housing market, and we also have a steady economy. DMV is not going to get a break. The houses in the DMV in 10 to 15 years are only going to be more expensive, because if everybody's going to want to move here, that is going to make your valuable asset even more valuable. So if you can get your loan paid off in the next 10 to 15 years, that means that all the appreciation that your house gets is going to be cash in your pocket, guys. Stranded homeowners, let's go back to the people in California, because this is really sad that certain regions in Cali and Florida may not be able to even get a home loan. Stranded homeowners, people who are already owning a home in these areas, may struggle to sell as potential buyers won't be able to secure financing. This is going to be a battle of the haves and the have-not. Like a real life Hunger Game, okay? Like, people who can afford to leave will leave, but there will be people that are going to be stuck in these regions of California, and you're basically going to have to rent. because you will not be able to buy a house, okay? So I don't even know what that's going to look like. I don't even know. Jerome didn't tell us if the government was going to get involved or not. He simply said that in the foreseeable future, homeowners insurance will not be accessible to certain regions of California and Florida, which means mortgages will not be issued in those regions, y'all. Okay? And the economic crisis consequences to this will be fewer real estate transactions. A slowdown in home sales means reduced businesses for realtors, mortgage brokers, and related industries. I literally just made a video talking about how to prepare yourself and your family for the coming economic outcome, the economic downturn, this Trump, Elon America. I told you guys, things are not changing for the better for everybody. We must be more conscious on the moves that we make, right? I'm in real estate. This is going to directly affect me. If I was a realtor in California or Florida, business is not popping because houses are not selling, guys. Mortgage companies, all of the people that work in these mortgage companies, they're going to be laid off. Here is another sector of people that will be laid off. And little people plan for today, but large corporations, they are looking at this data already because 10 years is not that far away, okay? So start paying attention to the data. And if you live in an area where you see that homeowners insurance isn't available or it's hard for people to get their houses or even rental properties insured, that's going to be a sign that it's your time to move. Don't sit around and wait for this to hit the fan when everybody catches on and then you try to make a move. You should be looking for a new state, new employment, get out of industries that are going to be affected by this economic hit. Okay? If you're going to stay in California, if you're going to stay in Florida, I don't think it's a good time to become a realtor. And I'm a realtor, right? I think that depending on where you are in the country, real estate may still be a lucrative profession. I love what I do, but this is actually making me to take my own advice, right? I am going to start looking into what type of professional development I could start working on. Maybe I go into education, right? Teachers are needed and I love children. So maybe I'll get a teaching degree and I know that I'm going to be profitable in whatever industry I go in. I'm just sharing some things with you guys because this is real. This literally came out of Jerome Powell's mouth. The fact that more media is not covering this is actually crazy. But that's why you follow me, because I'm going to bring y'all this tea so we can stay prepared. Let's get into it. Job losses. I already talked about that. Local government revenue declines. Cities rely on property taxes. That's another form of income that these regions are going to lose. If values drop, tax revenues shrink, potentially leading to budget cuts in schools, public service, and infrastructure. I thought schools were going to be safe. I said, oh, maybe I'll go into education. Schools aren't even safe. Education isn't even safe. Population shift and housing crisis. What did I tell you guys at the beginning of the video? We're going to see mass migrations. People may be forced to relocate from high-risk regions, putting pressure on the housing market in safer areas. DMV, are you hearing me? They are coming. People are going to be moving to our areas by the droves. This is the time for you to secure the bag. If you are in the DMV, I can confidently tell you, don't wait. Don't pussyfoot on getting your pre-approval, on getting your home loan and buying yourself a piece of property. Buy what you can afford now, because when all these people start wanting to move to our area because they are not able to purchase in their area, it's only going to make home prices even higher in the DMV. Remember that I am telling you this now. Don't get tricked out your bag. I'm bringing y'all this information so that if you're watching my channel because you are a prospective homeowner and you live in DC, Maryland, and Virginia, we need to connect soon as possible so that you can get on that, okay? Or find a realtor that you know, like, and trust and get on getting yourself a property. Remember, to be economically wise with any economic decisions that you make right now, if you get pre-approved for $500,000, you're not going to want to pay a mortgage on $500,000. Maybe you should look for a house around $380,000. You know what I'm saying? $290,000 a condo. I was looking at some condos with the buyer today, and I was like, oh, this is cute. They have some really cute condos that are in communities that have a lot of amenities and 2 full bedrooms. We went to one condo, had 3 bedrooms, and it had 2 levels, and it felt like a nice townhouse, and it was 1,300 square feet. That one was $290,000, okay? The payment on $290,000 is very much more comfortable and secure than the payment on a $500,000 property. So remember, you don't want to, like, mortgage companies are going to want your debt to be under 43% in order to approve you for a loan. But the lower you can keep your debt, so if you can get your debt to like 30% or lower, you are going to be in a much stronger economic position to be able to handle a home loan, okay? There is definitely going to be affordable housing shortages if demand spikes in safe regions. Rents and home prices could skyrocket, making housing even less affordable for many. I literally just told y'all that. I literally just told you guys, mass migration is going to result to skyrocketing home prices in the parts of America that are considered safe. The DMV, praise God, may he continue to cover us. We don't have a lot of natural disasters here. We have a strong economy. We have a strong housing market. We have everything you could possibly think of, and it's a huge melting pot. People from all over the world. I'm literally born and raised here, okay, and been a realtor for 20 years here. I know DC, Maryland, and Virginia like the back of my hands. All the nooks and crannies of this area, I know them. And when I tell you that we already have a lot of people that migrate here, this is going to get even worse 10, 15 years. Remember that I'm telling you guys this, okay? Remember that I'm telling you guys this. Banking and insurance industry shifts. Stricter lending and insurance policies. Banks are going, not may. You know how like the chat GPT likes to be politically correct. I'm telling y'all because I've been in this business for 20 years. Banks are going to require larger down payments or higher interest rates for homes in risky areas, making home ownerships even, it's going to be impossible. The areas that do not have homeowners insurance, it's going to be impossible for you to secure a loan because you need to have homeowners insurance in order to secure that loan, right? More government intervention. Jerome Powell in the clip that I saw did not mention any government intervention. But if private lenders and insurers pull out, the government may have to step in with programs to stabilize these markets. As of right now, I haven't heard of any government intervention. Actually, what's been circulating is that DOGE is actually trying to pull government out of the mortgage industry. So they don't want government involved in mortgages, which is going to take away a lot of programs that help a lot of people that may not be able to purchase home without these government-backed loans. Those programs may go away. Hasn't happened yet, guys, but this is just a forecast. All right. Increased federal disaster relief. With private insurers withdrawing, burdens of disaster recovery could fall more heavily on taxpayers. I don't think that's going to happen because taxpayers are already maxed, but this could accelerate efforts to build homes that are better equipped to withstand natural disasters. That's going to cost the government more money, but in short, this trend can reshape where and how Americans live, work, and invest in real estate over the coming decade. Would you, okay? Got that? Now, if you are someone who has been planning to buy a house and you made it this far to the video, I'm going to give you 5 tips on what you need to do to get yourself prepared to buy a house within the next decade. Literally, I want y'all to do this as quickly as possible, especially if you are in DC, Maryland, and Virginia, because the more people that come into our area, the more higher and more expensive our home values are going to be. Get your finances in order. Check your credit score. You want to get a credit score that is at least 620 or higher for the best rates. Save for down payments. There are programs like VA loan, USDA loans that are 0 down payments, but try to save 3 to 20% down, okay? If you don't know what that means, let's just say hypothetically, you're gonna buy yourself a moderately priced home of $350,000, right? We're gonna do a townhouse or a condo, $350,000 times 0.03. You wanna have at least $10,500 saved for a down payment, okay? Oh no, I cleared out my notes. So hold on, guys. Okay. Okay. Now, you want, after you get this money, I already talked to you guys about reducing your debt. Lenders check your debt to income ratio. Ideally, you want it to be below 43%. That's actually really high. And I highlight that because of inflation. So if you can get your debt to be under 40%, you're in the sweet spot. Paying off credit cards and loans can boost your approval odds. I always tell people, don't start paying off credit card debt until you actually speak with the lender and let them give you an action plan so that you know precisely what you need to pay off to get the loan approval. Okay, guys? Also, you want to get a pre-approval. I just said that. That's why you want to talk to a mortgage company. A lot of people are approved to buy a house right now, and you're listening to the wrong information, and you've never sat down with a mortgage broker to find out if, in fact, you are approved. The lenders that I work with are going to tell you whether or not you are pre-approved. And if you are not pre-approved, they're going to give you an action plan on what you need to do. Because a lot of people don't know that medical debt doesn't go towards your debt to income ratio. If you have a student loan, only 10% of your student loan is factored into your DTI, which is your debt to income ratio. So a lot of people are out here on the fence because they have medical bills or they have student loans and they think that it's going to keep them from buying a house. No. Get in the game while the things are still favorable, while it's still easy to get a home loan, y'all. Get in the game. Don't get tricked out your bag, okay? Know what you can afford beyond the mortgage. Factor in property taxes, homeowners insurance, HOA fees, and maintenance costs. Use the 28-36 rule. Spend no more than 28% of your gross income on housing and 36% on total debt. I told y'all that before I even read that, y'all. Want to keep your debt under 40%? ChatGPT is recommending you stay at 36% of your total debt. We've talked about this all week long. Have an emergency fund because owning a home comes with unexpected expenses, y'all. Number 4, work with a knowledgeable realtor. And if you follow your girl, Vicky Koger, here on YouTube, I have been a realtor in DC, Maryland, and Virginia for the last 20 years. I would love to be of service to those of you that are in DC, Maryland, and Virginia. I can help you buy a house. I can get you plugged up with the lender that's going to get you your pre-approval, and we can find a house that works for you. All right. We're not going to skip inspection, and the video that I made, I think the video that I made right before this one, I told you guys, I am excited about the market right now. I'm speaking February 2025 because There are houses that are sitting on the market. There are houses that the prices have been coming down. I have been able to negotiate some very favorable contracts for my clients, and we're definitely going to get a home inspection so that you know exactly what you are purchasing. That's all I have for y'all. This is a quicker video than what I normally bring, but I had to bring y'all this news as soon as I got it because the media isn't covering it yet. They're not covering it yet. Maybe everybody is still celebrating Valentine's Day, but I think it's very big news when Jerome Powell says that there are going to be certain regions of our country that will not have access to home loans. That's major news. All right? Stay on top of the data. Make sure that you keep yourself positive. Change your mind, change your life. Change your mind, change your life. And as always, until we meet again, bye-bye.